Hello, everyone. Welcome back to Crypto Cash. Thank you so much for joining me here today. This is your one-stop shop for cryptocurrency analysis, among many other things. Now, I like to help educate on best practice. That's why we're referring to this coin here today, Quant, because it is making higher highs, of course, and this is uncharted territory. And I get a lot of my community members, my patrons, asking for me to cover this, so that is the main reason here. Thank you so much for recommending that I cover this. Now, moving forward, I'm not a financial advisor. This is for educational purposes only. You should do your own research and make sure you do as much research as possible to ensure that you are a better, more effective trader. See, my goal is to make sure that you trade for a lifetime, not just for one day. So I'm going to help educate you on best practice. I'm not going to try to hype this coin up because that is not good trading. Good trading is having good risk tolerance and being careful, being smart and patient, and knowing when to take entry. So hopefully we can kind of look at some of those things here today. Now, I have a Patreon account. Feel free to reference that in your own time, of course, but I recommend you reference that if you'd like to follow along and basically, be a day in the life of the trader, right? So I provide all of my trades with my community members, somewhere in the range of 3 to 5 signals per week. I send out day trades, hodl trades, swing trades as well, just to ensure we all kind of follow along and profit together. So far, we're about 80% success rate in the last 2 months alone. It's been a great experience so far, so check that out in your own time. Everything you're going to learn here today is what I utilize every single day myself moving forward. Okay, so just keep that in mind. Again, check that out in your own time. If nothing else, reference my Telegram community. Good group of folks there. No cost there. Obviously, you can just get to know, the members and learn as much as you can as well. That's why we're here, right? That's why I created this channel, and we're already 11,000 strong in the past 4 months. So thank you so much to all of my members for your support. Couldn't be here without you. Really appreciate you, and I love you very much. Thank you. So moving forward, without further ado, I do tend to ramble. Apologize for that. Let's just go ahead and get to the charts. Let's get into it. All right, folks, let's go ahead and take a look at QNT. And just before we do, we always look at Bitcoin and Ethereum first. Get a baseline of the market so we know exactly what's going on, because that's a really important aspect of being a good trader, is to look at, well, first of all, the largest coin in the industry that controls the market, and second of all, ERC20 blockchain for Ethereum. It's good to kind of know that as well. So we're going to take a look at that here. And first, to preface, I utilize TradingView.com desktop application. Highly recommend the paid versions just so you can have more than 2 indicators present at a time. You'll see I use 2 to 4 indicators per time frame. I try not to go too much more than that because I think you want to have less noise and not be a crazy trader. You need to have the right indicators for the right time frame, but you still need to have more than 2 present at any given time. Therefore, the paid versions is nice. So link in the description below for that. Check that out in your own time, of course, and obviously, see if you like it. All right, so moving forward, this is Bitcoin. This is a 4-hour chart, and just to preface as well, I have some. This is an ascending channel that we have. I've drawn, I don't know, whatever word you want to insert there. I drew the lines earlier today based on the simple fact that it has this ascending pattern created because, this is a bullish trend and it should continue to work within that channel. Of course, it's not foolproof, of course, but if it does, then we'll see it kind of continue off sideways and perhaps break upward, because traditionally these channels obviously are going to break up versus down. So we should likely see in the next 24 to 48 hours the price come up to 50,000, break it, and stay above and close on the 1-day chart above the the 50,000 mark, right? That's what we're kind of hoping for. So if we look at the 1-day chart here, you can see that yes, we had a red candlestick here today, but yesterday the price jumped up and dropped down below in the same trading cycle. Therefore, it's still considered a resistance. So just keep that in mind in case you're wondering, why that's considered a resistance level now and not a support. That's the main reason, obviously. Moving forward too, we have 48,000 is the current support level, resistance level. I say support / resistance because technically, yes, the price dropped below on the 4-hour candlestick, but it could very well likely break above, and we're still kind of above on the 1-day chart. Therefore, it is still considered a potential support. But moving forward right now, at this point on the 4-hour chart, it's not looking great. But the thing that is looking good is the 50-day simple moving average is working as a support level. So you can kind of see that here, of course. That's this orange line here, working to help drive the price hopefully sideways and then up back above 48,000, so we can get that to close as a support level and then see a nice green day tomorrow to pass 50,000. That's kind of what I'm expecting to happen soon, just based on this, this trend of this channel here that we've seen so far. So all in all, that's kind of what's going on with Bitcoin for right now. Keep in mind, if we do lose this support level on the 50, we are looking at 47,000 as a close approximate. Correction, 46,500. 46.5 is the next major support level. All right. Moving on to Ethereum, I could pretty much just say the same thing for Bitcoin with Ethereum. Difference is there's different levels, of course, because we do have the 50 working as a potential support. That was just broken, of course. However, it doesn't mean that it's not going to continue to work as a support level, because once again, this 4-hour candlestick has just started. We still have roughly 3.5 hours left to find out if it'll close above. So tentatively working as a resistance there. Another resistance is 32,000, 3,205. Man, I can't talk today. I'm so sorry. 3,250 is essentially the major resistance level here. Okay. Below that, of course, 2,900 is essentially the support level. So we have this channel right now between 2,900 and 32.5. And we'll pretty much see what happens moving forward there. But good news is the 200 is working its way up. So that could potentially work as a support level to complement 2,900 if we lose the resistance or support at 48,000 on Bitcoin, right? Bitcoin stays below 48,000, keeps progressing and kind of, coming down, then Ethereum will effectively follow suit and possibly test 2,900. I think we're a long ways away from that. I don't foresee us coming anywhere lower than 46.5. Actually, even 47.5 is a pretty big channel right now for a lot of buying. In other words, there's probably one of the most largest volumes between 47.5 and 48,500, which is right where we're at for Bitcoin right now. Therefore, the probability of the price action dropping below that area is pretty low, considering the fact that a lot of people are considering it still as a good buying opportunity, and there's a lot of people holding on to positions they paid for originally in that time frame. Anyways, just a little something to think about there. Moving on to Quant, though, looking here at the 4-hour chart. Why don't we go and just start with a 1-day chart, of course. That's pretty much the main focus. When you do a good analysis, you look at the 1-day chart to kind of get its average true range and work your way down. Quant's average true range is much different than a traditional average range. In other words, it's the inverse. Typically, we see an average range for other coins different in the sense that it's much higher originally, because Bitcoin was between 50,000 and 64,000 when Bitcoin was there, like somewhere between, I would say, March and April 17th. We saw that. Now, if we look here at Quant, its ICO date was in February, and it pretty much just went sideways for a long time. In fact, you look at April 17th, there's literally nothing that happened here. So like Quant was like not even caring that the whole entire market was selling off by 15% in one day. It didn't care. It in fact, what, May 18th? Okay, there was somewhat of an effect here with a major Bitcoin, basically Bitcoin being, revoked over in China, essentially May 18th. That caused the price action to decrease another 15 to 20%. That was like the nail in the coffin for most other coins. This was affected here by it, but look how quickly it jumped back. Like literally took, what is that, 2 or 3 weeks for the price to just continue to progress upwards when everything else in the industry was going down. So the great thing about this is, yes, it is affected by Bitcoin, but only to a small margin. And that is exceptional because a lot of coins like this typically do very well outside of Bitcoin doing poorly. Like ADA, for example, right now, it's taking off. BNB is another one of those as well. Yes, it's reliant on it because it's on the ERC20 blockchain, and Ethereum is reliant on Bitcoin too, but it has a tendency of going on its own, its own tears, so to speak, its own increase, contrary to what's going on in the market, right? But this is even more exceptional because you don't usually see this kind of increase when the Bitcoin, when Bitcoin was going down, because all up until June, here we go, July 20th, 22nd. This is right when Bitcoin hit its bottom on the 30th. So this is interesting and fascinating because the price is actually going up the entire time instead of the opposite. You could almost reverse, flip it upside down, and essentially that's what it would look like for what the market should be doing. Like we saw this inverse applying to all the other coins. Anyways, what I'm trying to get at here is that Quant is obviously quantifiably doing much better than other coins did when Bitcoin was selling off. And now that Bitcoin is increasing, it's doing, 2, 3, 4, 5 times as good as other coins based on that sentiment alone. So it's interesting. Bitcoin goes down, Quant goes up. Bitcoin goes up, Quant goes up by 5, 10x almost. I mean, this is quite fascinating to me. So that's a really cool thing, and obviously we had this cool down period here as well because it ramped up so quickly. But there's a strong chance that now that we've had this increase, this step up, this staircase pattern, we might see some sideways action, but there's a good likelihood we're going to see another increase soon. Just based on the way that it's performed and the way that it's kind of outperforming Bitcoin, it's doing its own thing right now. I don't know what that is. There's obviously some fundamentals you want to research here, of course, if you're planning to invest. I'm not invested in Quant myself right now, but I'm going to plan to do some research soon because it is obviously very interesting to me to see what it's doing right now, contrary to Bitcoin. So I love to see coins that move kind of independent there. And what's great here, I mean, look at this. With all this increasing here, yes, it moved up over 70 on the RSI on the 1-day chart, but it's still been just trending closer to the 70 and kind of staying right there. This is a great sign. That means we still have plenty of room for growth here without any major retracement. So yes, we increased here today in the last 24 hours about 18%, but I don't think it's going to slow down anytime soon. I think we have a chance for another increase as well as more sideways action. Retracement, I think, is much lower probability based on what I've seen so far. Yeah, and we're only at basically 3 days into this bull run, so there's plenty of gas left in the tank. All right, so let's take a look here at the 4-hour chart. And just to note, the 50-day simple moving average is working as a support level. That's what it's supposed to do. That's how it drives the price up, which is good. So the price effectively bounced there. We got a convergence right around the same time that it tried to bounce at 5 a.m. here today. So we'll just go ahead and mark that here as well. I like to split right down the middle. And then just kind of take a look at how that reflects on the 1-hour chart for the Ichimoku cloud. So if you're new to the channel, Ichimoku cloud is just a really awesome indication of a buy signal. And it really tells us when to consider taking entry, especially if we get a convergence on the MACD on the 4-hour chart, right? So first of all, to preface, if you're new to swing trading in general, the common rule of thumb is to wait for the MACD to converge on the 4-hour chart. That's like the most impactful type of indicator you could utilize, right? So let's just go back to that really quick. So if we look at the 4-hour chart, we look at the MACD here, we had a strong convergence. So the convergence is essentially this 12, which is the faster moving one, intersecting with the 26 in upward fashion. These are EMA lines. Exponential moving averages is moving up, of course, because it's basically telling us that the bears are no longer in control and the bulls just took full swing, all right? And when you have that convergence, is that shift from bearish to bullish sentiment. Therefore, a long position is ideal based on the fact that we're looking at the 4-hour chart. So these are all 4-hour time bars. In other words, it's a larger time frame, therefore you're going to plan to hold on for longer. You wouldn't necessarily utilize this if you're jumping in for an hour or two at a time trying to trim or skim a little bit off the top. Okay, so more of a swing trader's tool. So when we identify that and then we look at the 1-hour chart and we see this Ichimoku cloud and the price is just jumping above the cloud here, not 1 hour before the MACD gave us a convergence, that's like a double storm or double positive, double rainbow, whatever you want to call it. It's fascinating, it's awesome, and it's really cool that these two things tend to correlate. I've noticed over the years of trading that those are pretty consistent things. So if you can get those two things to match up, take entry, take a long position, you're almost always guaranteed profit. Okay, so that's kind of step number one. I utilize that. I look at that first. And a lot of times I'll just set my notifications, my alerts, and get something to essentially be able to show, when I get that MACD convergence and or an Ichimoku cloud essentially crossing above or coming above. And if you're new to the channel, you have no idea what I'm talking about. Ichimoku cloud is essentially an indicator that tells us when the price is above the cloud, it's considered a buy signal. When it's below, it's considered a sell signal. Yes, you can argue the fact that, it was below the cloud here and it wasn't much of a sell signal. That happens sometimes. States of consolidation do that. But bear in mind, the price had ramped up so hard and so violently here in the recent past that it had to go sideways, if nothing else. It's a lot better than retracing and coming back down, right? That's the beautiful thing about it. That's why a staircase pattern, when you see bull runs do something like this, it's very, very beneficial because it gives it time to calm down, time to cool down. Because yes, we had a 20% increase today, but we're going to have that opportunity for that relaxation period. It might pump even further. I think we're still have room for growth here. But generally speaking, that's what we want to look for in a bull run, is to have this nice, up over pattern instead of these jagged lines. And like for example, H bar, if you've looked at that one, there's really no consistency. It's good long-term investment, yes, but it's constantly, it's got these really strange long wicks and short candles, and it's just a difficult thing to trade on a shorter time frame. Something like this, more consistent, it's jumping up, it makes up its mind, it wants to go that direction, it's doing it. But it goes sideways too. Yes, it retraces slightly, but it's never more than 50%. In fact, it's probably only about a 60% retracement, correction, 40%. It didn't come down 60 to 50%, which is standard for most. All right, so anyways, that's kind of what I just want to cover there, drill that home. And if you're new to the channel as well, or just in general with the cloud, future reference, if you see something that looks like this, all you got to do is disable those indicators because there's a lot of noise in the cloud. It's definitely something that can get kind of convoluted. So just disable all the first 5 lagging spans and all those things. They're very helpful in their own way. Unless you do your research and understand what they mean and how they work, it's not really worth using based on just again the way that I trade. Again, I like only 2 indicators present per time frame, minus the MACD and RSI. Those are always there, but I'm referring to, the 1 hour chart just using Ishimoku Cloud and of course TD sequential. So why don't we take a look at TD sequential here so you see what I'm referring to. And this basically tells us if we're at a state of exhaustion. Now there's a chance we might have got a reset in here since that candlestick jumped up so high. Yep, it did. So here's the thing with TD sequential, first of all, what it does is it basically tells us when the price is overextended or there's exhaustion, right? So typically speaking, I like it on the 1 hour chart the best. It works on the 4 hour on the 1 day still. But for the Ishimoku Cloud, I utilize that to kind of see where the entry points are. We already identified that here, right? These two lines, this would have been a case in point to take entry. However, with the TD sequential, it basically tells us that, hey, we've got 9 hours of exhaustion, or sorry, 9 hours of momentum in the same direction. We're going to reach a state of exhaustion. So usually when you hit 9 hours on, basically just say, for lack of better terms, 9 candlesticks on the TD sequential, it's likely going to reverse to the downside, or the inverse, of course, if it's already going down, it'll come back up. So right now we're at a 4, and the reason why we're at a 4, we should technically still be at a 9 plus, is because this one jumped up so high and retraced back down that it reset right around here, because technically this candlestick is higher than the 4th previous candlestick closing. That's how it counts up. So what I'm getting at here is it's kind of in overtime, but for lack of better terms, we're at a 4 right now. So hypothetically, just that being said, with this being a 1 to a 4, we got that reset. We have 5 hours left of bullish sentiment, bullish momentum that could continue. Okay. So just something to kind of understand. It's not foolproof, of course, but we saw the convergence in the MACD here, and we've had roughly 9 hours of momentum. So I feel like it's not going to go too much higher. I think it's going to level out, maybe go sideways for a little bit, and then possibly test one of the support and resistance levels. Speaking of support and resistance, we didn't really do that. I apologize. Looking at the 1 day chart, oftentimes you want to go ahead and mark support and resistance levels based on consistent rejections. You can see here there's a pretty strong support right around 150. So I'll go ahead and mark that there. You can see the price kind of stopped there multiple times and continued upwards. We've also got a stopping point here as well, about 177. So mark that as well. That's probably one of the more recent support levels. Another thing you can do too to kind of get those, and this might match up sort of, is to utilize this here as well. Look at that, isn't that interesting? On the Fibonacci retracement tool, you take the lowest point to the highest point. It'll basically give you potential support and resistance levels. Now these ones I just marked arbitrarily, well, not arbitrarily, of course, they're relevant, but I marked them just based on the recent support and resistance levels. You find, isn't it interesting how the Fibonacci retracement tool basically really, like within $1, basically told us that we are at major support and resistance levels. The reason why is because the industry leaders, those who are controlling the market and the price, they're using these tools every single day. So why not jump on board? Why not utilize the same thing with them, right? The key though, and I feel it's better, is instead of using the exact same retracement tool that they use, set your support and resistance levels, or your stop limit and your stop losses, or your buy targets, whatever it is you're planning to do, put it right below those retracement lines. So that way you can always get in before them or get out before them, therefore maximizing your benefit, because a lot of times they'll retrace on you and you can get stopped out. That being said, these are some major support and resistance levels here. So if the price does end up coming back down, it'll probably come back down to 177 and bounce. If we lose that support, it'll come down further, possibly test 150. This is a much stronger support level. So keep in mind, it'll probably retrace, come back down, work itself into this channel eventually, and then continue back up. Because if you look here, you can see that it has a tendency of, yes, it comes up and over, but it's kind of up and down, right? So there's a good chance that we might see this support level tested again. Okay? So just be mindful of that. But generally speaking, this is definitely a bull run. There's definitely some bullish momentum here, and there's a good chance it could continue. We are kind of in, I wouldn't say no man's land, but this is uncharted territory when you're creating higher highs, higher lows, and consistently new highs. There's no previous all-time high we need to worry about, right? We've already marked that. That's what the support level is here, because this was the most recent all-time high. So all we can really do moving forward, we can't really predict how much higher it's going to go. We can just control our losses, right? So if you have a position open right now, recommend moving your stop loss to somewhere in the range of 175 and or 145. So that way you can always still maximize and take your profits if necessary. but you also are erring on the side of caution in case the bottom drops out and it comes back down and something happens. We really truly don't know how much higher this could go. Again, it's not about how much higher it'll go. It's about how much lower it could possibly go as a result of hitting its highest point. We don't know that yet. So again, protect your investment, be smart, make sure you have a good safe risk tolerance. If you're in the profit, you're 2, 3, 4, 5x right now, don't get greedy. Keep moving that stop loss up as the price continues to increase. There's nothing worse than being in the green and then eventually taking a loss. I'd much rather be in the green and take an early profit. You can sleep much better at night knowing that yes, you wake up the next morning and the price is higher, you missed out on some profit, but at least you took your profit and you got your money while you still could, instead of just losing when you have the game. It's the same thing as gambling, right? So if you're going to gamble $100 and you're okay with losing it, that's fine. But if you're going to gamble $100 and you made that $100, if you don't take that $100 back and gamble with those winnings, you're kind of just not being very smart at all, right? Why not save that, have some fun with that extra money? In this case here, of course, isn't gambling at all, but that analogy works because you're effectively gambling if you're not moving your stop loss up and saving and protecting your investment. All right, be smart, be wise, and this is what I like to educate others on. I don't think we hear this enough, unfortunately, nowadays, based on the fact that it's all about the hype, and we can't get hyped about coins. Yes, it's cool to get excited about profits, but you're going to lose that money if you are not careful and you don't have a good risk tolerance. So everything you just learned here today, consider subscribing to my Patreon account. I utilize this every single day that I trade, and I provide my trades with all of my community members. I send about 3 to 5 signals per week. Usually they are swing trades, hodl trades, and traditionally usually around 1 to 3 day trades that I take throughout the week. But I'm just very careful and very cautious. I have about an 80% success rate for good reason, because I don't just jump in arbitrarily because it's the right thing to do. People tell you to jump into a coin, it's not the right thing, right? You never listen to other people, do your own research, figure it out for yourself, and do the right thing, okay? So I hope you found benefit here. Of course, if you do, like and subscribe, all that good stuff, social media crap down below. But moving forward, I do appreciate your, making it this far in this video, of course, and looking forward to helping you out in the future. Let's all learn and grow together. Join my Telegram community if you get a chance. Good group of folks there. Hope you have a great rest of your day. Thanks again for your time. I'll see you soon.